Well, today didn't really turn out as the markets had hoped for it to turn out from my perspective relative to the Federal Reserve. Yes, the Fed did, as planned, cut the interest rate by a quarter point, and as it pretty much needed to do to shore up the liquidity crisis developing with the drop in the reserves, as I shared a few days ago on a video. They announced that they're going to stop for now their quantitative tightening and the runoff of their balance sheet. But the Fed also did something else, which I think has the markets maybe spooked, maybe the panic has just begun. And out of CNBC, quickly, Dow Jones average staged a rapid reversal, it says on Wednesday, touching a record high earlier in the session before rolling over after Federal Reserve Chair Jerome Powell indicated the central bank might not cut interest rates again in 2025. Again, the market expectation and the hopium is that the Fed was going to cut for sure in December again and then continue right on into 2026, right? The more we have these investors levering up, margining, and reaching for yield, the more the markets are looking for further indications of cheaper money, right? Says the blue chip indexes closed down 74.37 points to 47,632. S&P ended a handful of points lower at 68.90. NASDAQ rose, says, to a fresh record close. But gold was up. I saw earlier this morning $70 an ounce. It actually closed down $21 an ounce. Silver was up like $1.50 an ounce. It closed up 50 cents. So the reversal in the metals. The 10-year bond spiked over 4% as well. And also cryptocurrencies fell pretty dramatically. Bitcoin dropped a couple thousand. Ethereum, XRP. So this was not the, let's say, the outcome that was, let's say, expected and planned. Again, I'd love to get your thoughts and comments before I jump in to the rest of the story and the next topic, which is the regional bank starting to panic. Let me first, as I always humbly ask, if you would please subscribe to the channel. If you haven't subscribed, I would really appreciate it so we can keep growing the community. And thank you to all of those new subscribers that have joined over the last couple of weeks. I do appreciate it. So the Fed, it says, lowered the benchmark overnight borrowing rate by a quarter percentage point. And it marks the second time this year the bank has slashed rates. Prior to the decision, here we go, investors were betting on another quarter point cut at the Fed's December meeting, okay? But Powell knocked down market expectations after saying that there were strongly differing views about how to proceed in December. During his meeting's committee discussions, a further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it, he said, okay? I would not be surprised to see the markets digest this further and start a bit of a mini bout of panic or sell-off here. Again, not financial advice. I'm not a stock market analyst. I'm not a financial advisor. I'm just saying the expectations were for a continued dovish Fed right through this meeting into the year end, okay? And right now they're not getting it. 10-year yield jumped back above 4%. So, and they are going to, of course, as they announced, they're going to stop their quantitative tightening. So, was this a situation where it was kind of buy the rumor, sell the news? We'll have to wait and see how the markets digest this next few days. Let me discuss another bank, regional bank, or a large bank, which is now, I discussed on last week's shows, as the regional bank issues and these NDFI, basically implosions, these NDFI transactions start to implode one by one and impact these smaller and regional banks. You're going to start to see all the banks, the big banks and the smaller banks, start to announce and conduct internal reviews of their loan portfolios, right? To, number one, let's say, provide confidence, if you will, or try to their shareholders, and also dig, under the covers and see if there's anything that needs to be flagged or weeded out, as soon as possible. Okay, so HSBC, this is out of Bloomberg. Bloomberg yesterday. HSBC reviews ties to hedge funds with credit fears on the rise. And now, yes, HSBC is primarily a UK bank, but listen to this article. They make loans to regional and smaller banks in the United States. And we know those regional banks are then going and lending out, along with the bigger banks, lending out, millions, hundreds of millions of dollars to these intermediaries to provide loans to subprime borrowers all across the board, right? And to fund all types of businesses. So HSBC Holdings says it's reviewing its exposure to smaller banks and hedge funds that have large private credit businesses as the market comes under scrutiny following the high-profile collapse of First Brands Group and Tricolor Holdings in the recent months. What is very important in these situations is to consider the second and third order risk exposure of other smaller banks or hedge funds that we may be dealing with. And that becomes a primary focus for us. Pam Kerr, Chief Financial Officer of HSBC, said on a media call Tuesday after the bank announced its earnings. She said that HSBC's own direct exposure to private credit is small, in the single-digit billion. So that, according to HSBC, is a small exposure, single-digit billion. They do have exposure, okay? And the firm follows a very rigorous credit framework for all lending transactions. Don't they all say that, okay? From a direct exposure perspective, I'm very comfortable, she said. We're monitoring the situation very carefully. And the last quote she made was, "You're going to have to respond by being much better on due diligence." Okay, so we know that. Now let's talk about another topic that I discussed yesterday about, are some of these regional banks and smaller banks, certainly here in the United States, are they front running this? Are they deciding to consolidate because they know what's coming? They know they've got bad loans in their portfolios, and they're trying to make themselves more resilient. Are they trying to front run maybe the larger banks, trying to come in and gobble them up? Well, let me share the story with you. I saw it. I'm gonna dig into this more, and I will tease it out in further shows, because there is a hedge fund that has emerged recently, last few months, called HoldCo, HOLDCO, HoldCo. And what they do is they launch activist investor campaigns against regional banks that they believe are underperforming, okay? And let me read the article to CNBC from yesterday. And the quote is, "We're trying to shame them. Upstart activist investors target America's underperforming banks." Again, to the concept of panic. Panic by the stock market based on what's going on with the Fed. Panic by some of the bigger banks that now are deciding that they better look into their own loan portfolios to make sure that, if they have contagion, that they try to contain the contagion. And now we have activist groups in the United States that are also infiltrating, buying up shares of regional and small banks, and then putting pressure on the banks, okay, and the bank CEOs, all right? This will have an impact, folks. Let me read the story to you. Since July, the 9-person hedge fund that the owners run from Fort Lauderdale, called HoldCo, has challenged lenders with more than $200 billion in combined assets, demanding that they take swift action or face public campaigns to overthrow their boards and fire their CEOs. It says the fund notched a victory this month after Comerica, under pressure from HoldCo, agreed to sell itself to rival Fifth Third for $10.9 billion in the biggest bank merger of the year. HoldCo has since announced activist campaigns against two smaller regional banks, Boston-based Eastern Bank and Billings, Montana-based First Interstate. A fourth bank is now in their sights. They plan to launch a proxy battle against Columbia Bank, a lender with $70 billion in assets and 350 branches across the western states, unless they strike a deal with management. Okay, so regional banks, it says, have struggled to regain their footing after the 2023 collapse or crisis that consumed Silicon Valley Bank and First Republic. So these guys are basically jumping in here. I'm going to dig further. I mean, at first blush, you might say, well, this is great. They're coming in to clean up the bad actors and make it better. But again, they're doing it for obviously money. They take positions and they short the stock. I'll dig in deeper. I'm not going to do it in today's show. I don't want to go too long, but HoldCo. Make a mental note about that. The firm's rise has rattled, and here comes the panic issue, has rattled executives across the U.S. regional banking landscape. Several banks have quietly started reviewing their capital plans in anticipation of possible activist scrutiny, according to industry advisors who spoke to CNBC. Okay, and HoldCo, it says, now owns more than $1 billion in regional bank shares. Okay, so again, this is a very long story that I was going to go into in more detail. We'll do it on another show, but they are out there, folks, and that's another level of panic that we're going to start seeing unfold and affect these smaller regional banks. All right, big banks are going to start announcing audits and more loan portfolio, let's say, investigations. Let's see what the stock market does, and if this is a momentum killer moment because of what Powell said today. Again, we'll have to wait and see how it plays out. Sometimes you get the Fed decision and the comments after, and what happens on the end of that day, everything reverses the next day. You would think that a rate cut, although it was expected, would be stock market positive, gold and silver positive, and cryptocurrency positive. But again, if the markets cannot, let's say, count on the fact that they've got Jerome in their back pocket for a December rate cut, the sentiment may change quickly, and we know how everything is so let's say inflated right now and levered up. Thanks for watching. If you like the content, if you enjoy the content, leave me a like. If you're not subscribed, please subscribe for me and leave comments and thoughts. I do my best to review and respond. With that being said, I will talk to all of you soon. Bye.